Welcome. This is a class by the UNR Extension Business Development Program. Here is our Facebook page. I encourage you to visit and you can review the past videos that we have from the town halls, from our guests, and very good information for your business and sometimes your personal as well. So we're going to talk about some business and legal entities in Nevada, talk about taxes and how that is related to income and expenses. We're going to go through the characteristics of each business structure, not all of them, but the main ones. And we're going to see how the SilverFlume in the Secretary of State website works and how can we use it to run our business, start our business. First, I want to introduce you to the Department of Business and Industry Roadmap. They have a business hub, a page where you can find a lot of information and resources around our state. This is the roadmap. It is a PDF file that you can download. It is interactive, so you can go ahead and save it on your desktop, click around the different buttons, and find information about funding, markets, certification, licenses, all those different subjects that we have wonderful resources here in Nevada. So, how to begin a business in Nevada? I've been doing taxes for about, I think, 17 years by now. So there's always a confusion in, okay, I'm gonna go and get my license. I'm gonna go and open up an entity. But we have to pause for a little bit. And the business must begin with proper planning, maybe in a piece of paper, maybe with set of questions, with a roadmap, not with a business license or LLC. So don't get ahead of yourself and go open an entity with the Nevada Secretary of State. Try to do some planning, some brainstorming before you do so, or rent a place, or just get a license. Make all the questions before making decisions. I heard this from Marcel Schaefer the other day in a town hall, and I love it. Make all the questions before making the decisions. And you are here to learn and ask questions, so please do so. Nobody likes taxes. We understand that. I mean, I do taxes, but I don't like to pay them neither. So we have to understand how the money flows and understand how the business taxes works. If you are afraid of something, the best way to overcome that is to understand and learn about it. Taxes it's just part of doing business. It is a cost that we have to understand, and by understanding that concept, we can control and minimize our taxes. We have the right to pay only what we have to pay. So, first, you have to think about, do you need an entity to run your business? Okay, so basically you want to keep your personal assets separate from your business. Protect them from your business debts or liabilities. And this is a question that doesn't have a yes or no answer straight up. You have to evaluate the industry that you are in. Mike, you're going to open some website development. The level of risk right there, it's not that much. Hopefully you are dealing with great customers and you know what to do. But it's different than when you are going to open a trucking company. And you're going to be doing some litigation work, or you're going to be doing in construction, landscaping, some manual. You're going to be entering somebody else's houses. It really depends on your industry. We are not lawyers. We are not. We cannot provide you a legal advice, but you have to understand the business environment that you are working, that you're getting into, and also understand your personal side. I mean, what assets do you have to protect? I have just one car paid off. Okay, that's not. You probably love that car, but it's not a great asset that needs such a protection from your business structure. So it really depends. You have to evaluate your personal side and the business industry that you are walking into. Okay, Mike, let me know if there are any questions, but
Okay.
I'm gonna go through the presentation. So
Gen-
evaluate,
Generally, Juan, I
understand.
was going to say if you have a business that deals with anything with kids, right? Anything with children,
Exactly.
anything with seniors, anytime you're transporting people anywhere or things anywhere, or anytime a customer comes into your actual physical business location, you really have to be cognizant of liability protection.
Definitely different transport, kids and senior citizens than packages, for delivery. So definitely you have to measure that. In doubt, please get advice from a lawyer. So let's assume online commerce clothing shop. Um,
That's a good question.
that's a good question. The first line of defense is always your liability insurance. Okay, and what is your refund policy in that particular business? So um, are you dealing with a lot of volume or just small volume, things like that? And sometimes I was reading an article yesterday that do you know that Walmart started like a sole proprietorship? So sometimes you don't need a legal entity to start your business, to start getting a sense of how the business is going to go. Maybe you want to start simple, and then you will always have the option to open up an entity and move forward and try to bring investors
Well,
to
most
your
most
company and
online
things like that.
businesses have very limited liability because people don't actually come to your business. Now, if you're like an online pharmacy or something like that, where maybe it's a more serious nature. If people can sue you for something, they will try, right?
Exactly.
You don't have to be correct to sue somebody in the United States. You just have
Mhm.
to file a lawsuit, really, and you have to go to court. So typically, online businesses, you don't get sued as often because people don't walk in and slip and fall, or they don't, your car doesn't come out of gear and crash into theirs or something of that nature.
Yes, a lot of subcontracting and things like that. So let's assume that the answer is no. Okay. So what's going to happen? What are you going to be your the steps that you have to take? And you have to understand that as a business owner, there are different entities that you have to be in communication and you have to comply with. And many times these entities will look at your business from a different point of view. The state wants you to be in compliance, register, have a license. IRS, federal, they want you to file your taxes, be in compliance, do bookkeeping, and things like that. So there are different entities from different levels of the government. It's going to give see you with different eyes. So let's assume that it's a no. Nevada. Here in Nevada, what you need to do, if you're not going to open an entity, you have to register as a sole proprietorship. Usually the registration is, I think, is $200, and you're gonna be under the NT7 registration. Basically, you are yourself as a person, and you are registering your business as a person. Clark County, what do you need to do? You can go and open a DBA, doing business as. Okay. Basically, I, Juan Salas, want to open a tax company under my personal name, and I'm going to call it Juan's Wonderful Taxes. Okay. So get it right. So that's going to be my DBA, but the business owner is going to be me. I'm going to be the one responsible. Okay, so DBAs are very, very flexible, are a great tool. So you can actually start your business as a sole proprietorship, get that DBA. That DBA is gonna get registered at Clark County. You can take it to the bank, open a bank account, and do all your business cards and flyers, not under your name, but under that DBA. What happens with the IRS, federal level? You're going to be a sole proprietorship. So there's not too much confusion about that. You should get an EIN number. You don't have to open an entity to get an EIN number. You as a person, as an individual, can also get an employer identification number. That helps you. You can share that information with your suppliers, with your customers, with everybody. So you don't have to share your social security number. So you're going to file your taxes in a Schedule C under your 1040 personal tax return. At the local level, yes, you have to go and find out about the licenses that you need and the permits that you need. And that depends on your industry. If you're going to do a mechanic, you have to check what's going on with the oil, with the occupancy regulations, fire permits and things like that. If you're going to operate from your home, just you have to register your home office. They're going to let you know if you can actually run a business from your neighborhood, if your association allows you to do so, and things like that. So um, as a business owner, it is your duty to understand all the different levels: Nevada, Clark County, IRS, and local. There's an assumption sometimes that, okay, I have registered my business with Nevada, so they're going to let everybody else know what I'm doing. I just registered with Nevada. That's all I need to do. My business is official. No, you have to check with all the different levels. I have a complete overview of your business environment. Okay. Um, do I need to run my business under an entity or not? Let's say this, we say yes. Okay. Yes, you're going to run it under an entity. This when it gets a little bit more complicated. So what are you going to do in Nevada? You're going to probably have to file your articles of organization if you decide to do an LLC, or you're going to do your articles of incorporation if you decide to open a domestic corporation. There are other options. For example, if you have a corporation in Florida and now you're going to operate here in Nevada, there are other filings that you have to do in Nevada. But we're going to cover just the main two, the most common ones: articles of organization for LLC and articles of incorporation for a domestic corporation. And we're going to go over an example of how this looks and how it's done in SilverFlume. Clark County, you can do also a DBA once you open your LLC. So I'm going to open my LLC under Juan Salas Enterprises, but my DBA is going to be Juan Wonderful Taxes. So you can do that. And the DBA helps you do better marketing sometimes, and you just want to have your LLC under your name because that's very cool, but you don't want to do it. You don't want to use that as a marketing tool. IRS, can you change your DBA? Yes, you can. You have to go through the Clark County to do so. Okay, and they have their process. Many things. Clark County right now, I don't think you can do a DBA online. The last time I did it, I just forwarded the mail through mail. I'll have to send them a check. But yes, you can definitely do so. I mean, it
I
would
think
be very impractical not to do, unable to do that.
Juan, I think a question people ask often is, can I have multiple DBAs underneath an LLC or a corporation?
Yeah, it really depends on you're gonna do different businesses under the LLC. Sometimes you don't want to mix. I'm gonna do taxes and also I'm gonna do some. What else can I do?
Yeah,
I'm gonna do
let's say you have a husband and wife team.
electrician.
You have a husband and wife team, right? And and you form his and hers LLC, right? You can file a DBA for her tax service, and you can file
Mhm.
another DBA for his electrical company, right? But ultimately, you're filing a joint tax return, and so all those profits or losses filed funnel back up into
Yes, they funnel back up, but probably the electricity business has a lot of liability. You don't want to put in the same basket as the tax business. You know,
exactly.
um, I mean, taxes is a very risky business sometimes.
So risky.
But but yes, let's talk about. I don't know if electricity is more risky than taxes. Okay, so IRS, you have to definitely get an LLC, your LLC EIN number, and your corporation an EIN number. Sometimes there's a confusion that once you register your LLC, they provide you a Nevada ID, but that's only for Nevada. Okay, you have to, Nevada has nothing to do, will not provide that information to the IRS. You have to take that name, that entity, and request the EIN from the IRS. Okay, so once you get an EIN, you have to decide if you're gonna keep the default classification. We're gonna talk more about this, or make an election to change sole proprietorship. Just to give you a little bit of a preview. Let's say that you open an LLC. Okay, guess what? LLCs, there's no rules to tax LLCs. So your LLC must be classified for tax purposes under a sole proprietorship, a partnership, a C corp, or an S corp. There are other classifications, but we're going to just work on with those that are
Juan, I
the
was just
most
going to
common ones.
say, I was going to interject one thing. A lot of there's a lot of misinformation about this, but IRS doesn't care about your local business license. They have nothing to do with that. They don't care. They don't register that. IRS only cares if you're bringing in money, and even if you're not licensed, and correct me if I'm wrong, Juan. Even if you're not licensed, if you bring money in anything other than a W-2 from a job, that they consider you in business. That
Exactly.
that is miscellaneous income. Who cares? They don't care if you have a business license. They don't care what entity you are. They only care about income and expenses.
Usually, the definition is once you have the intention to make money, you are in business in front of the IRS.
Yep.
So if you're running income, you're running expenses, you have to declare that. Even though if it's a legal or illegal, if you are licensed or not licensed business. Then at the local level, you have to check the same way you did it with a sole proprietorship, licenses and permits. Again, you have to check with if you open a restaurant, if you open mobile taco shop, definitely you have to check with the health department and and make sure you're in compliance with all of them. So I wanted to just clarify that once you decide that you need an entity, you decide that you need an entity, you have to go through all these different levels and make sure you comply with at every level. So one very important tool is your where's your business located. Okay, because once you register your business in Nevada, like we learned, that's not the full story. We have to check at the different levels. That means county and city. Okay, so this is a wonderful tool that we have here in Nevada. Unfortunately, I'm gonna I can share with the web address later on. It is not a very friendly web address, but it is in the website of the Clark County. It is called the jurisdiction locator, and we're gonna do a quick example. Okay, so let's assume that your address, your business address, and this is a real business address, at 5715 South Pecos Road. Okay, this is a restaurant client of mine. So we have, you punch in this address over here. You don't have to include the south or north or anything like that. Just the number, the street, even road. You don't have to put that. And you do validate. Okay. First, look, the address is Las Vegas, Nevada. Okay. So once you punch in the address, it's going to give you the results of, you know, the things that they appear in the database. And your business is the one that says South Pecos. And what is the jurisdiction? It's Clark County. Okay. The address might say Las Vegas, Nevada. Okay. But the jurisdiction is actually Clark County. So you have to file all your licenses and permits with the Clark County. Okay. This is your first stop. This is where your business is located. So this is your headquarters. So you definitely have to check all the requirements with the Clark County. Okay, so don't get confused with the Las Vegas address. And this is what's very relevant during the Clark County grants. Okay, because Clark County was giving up grants, and many businesses didn't know they were inside the jurisdiction of Clark County. So
There's a question.
maybe they missed the opportunity or not. Does
Does
this
this
apply
apply
for
for?
home-based businesses? Yes, yes, because you're a home-based business doesn't mean that you don't have to comply with your local um, requirements. So yes, definitely you can punch in this and it's going to tell you if your home-based business is in North Las Vegas, Henderson, you have to check with their business department and make sure you are under compliance with them.
Yeah, you have to understand Clark County functions like a city when it comes to business licensing.
Yes.
Even though the city says Las Vegas, we have 5 licensing jurisdictions. We have Clark County, Las Vegas, North Las Vegas, Henderson, and Boulder City, right? North Las Vegas, Henderson, Boulder City are all independent cities. They all have their independent police departments, fire departments, building departments, and business licensing departments. Clark County, even though it says Las Vegas, most of Clark County resides, anything south of Sahara Avenue generally until you hit the city of Henderson is Clark County.
And through the
The
strip.
airport sits on Clark County land, UNLV sits on Clark County land, and then the city of Las Vegas actually goes up into Summerlin and goes down into East Las Vegas as well. Elvis actually never played in the city of Las Vegas, right? It's the downtown area. He only played on the strip. He actually played in Clark County. So it's kind of funny if you get tested. But we all share Clark County School District, every jurisdiction. So it's a little confusing for that. But
that jurisdiction locator is going to give you all the information you need about your real jurisdiction once you pop up the address there. So before we talk about taxes, I want to just refresh. If you were in another class, you probably know this, but it's a good point that we can refresh. 3 main taxes that business owners should know about. Okay, FICA taxes. This is regarding Social Security and Medicare. It's 15.3% and applies to net income. Okay, so always you have to know the formula for taxes, which is taxable amount times tax rate. So you have to, if you're worried about your taxes, you have to know what you are getting taxed on and what is the rate that applies to that amount. Okay, for FICA taxes, 15.3% applies to net income. Federal individual taxes, right now we have from 0 to 37%. It is progressive, so as it moves up as you make more money. And the income for corporate taxes, which is at flat 21%, also applies to net income. Okay, these are general formulas that will help you decide what kind of structure you need, or the tax rates that apply to your particular structure. Okay, so ingredients for the final result, these three tax. Let's just review what is income, because during the pandemic we had a lot of issues, and it's tax season, so it's worth reviewing real quick. Income, anything that is in connection between your business. You know, if you must report all your income, whatever you got it in cash, checks, property, services, you exchange services, you put it under the mattress. Maybe you spend the cash even though before it reached the bank. Yes, that's all income. But you have to understand what is not considered income as well. There's some misperception. That's why bookkeeping is very important and very relevant. Owner contributions, loans, returns, or personal deposits, those are not income. So if you look at your bank statements and you look at the deposits amount, that's going to have a mix of income and not income items sometimes. PPP funds. We started with loans. Right now, some businesses got it, didn't get the forgiveness yet. So PPP funds are not considered income because they are loans. After they're forgiven, they are not going to be taxable, neither. So make sure you don't include that as income in your financial reports. The EIDL grant advance is not taxable as well, so take it out from your taxable income. A lot of people got unemployment this year, even though you got the what is the federal employment name? The oh, I'm running a blank right now. But unemployment is not related to your business, even though it was based in income from your business. Don't include it as income. It's just personal income on the personal level. Expenses. Since we're gonna talk about FICA and net corporate taxes, both are based on net income, so we have to understand about expenses as well. They need to be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business. This is the portion when we talk about expenses, usually, cost of goods sold, fixed and variable expenses, some indirect business expenses, car, home office. This means that partial, the partial, only a part of those expenses are deductible, not all of them. But the key thing is, would you reimburse them? If you are a business owner and you're not willing to reimburse your employees for those expenses that they bring you over, receipts, it's because probably are not ordinary and necessary. So that's kind of the tool that I usually share with the participants. Mike, if you're not gonna give me a reimbursement because of the McDonald's and the Office Max receipts and Walmart receipts that I bring you, it's because probably it's not a business expense and it's not reasonable. Okay, so try to use those parameters when you are making up your mind. Is it deductible or not? Okay.
And what's ordinary and necessary in one business may be not in another. It depends on the type of business that you're in.
Yes. So there's no golden rule. Let's use some logic. Tip for this tax season: expenses paid with PPP in an ideal advance are deductible. This is great because you are not getting taxed on this money and you can use the expenses. So I think that's going to happen only this year, hopefully. Okay, so let's go back to corporate and tax of taxes of institutions, of entities. You have to understand how the money flows. Who is getting paid? Who's getting the money here? Okay. So you have to understand, in order to figure out your taxes, you have to make sure 100% how you're getting taxed, who's getting this money. Okay. Sole proprietorship, partnership, a corporation, S corporation. These are the most common forms of of tax entities. Sole proprietors, like we said earlier, it is the easiest way to begin a business. Um, it is not an incorporated business. Like we mentioned, you don't have to get an entity. This is when you decided that you do not need an entity to run your business. So as soon as you start making money, you are in business. You can get your DBA, your EIN number. Of course, there's no legal separation between you and your business. Your business is reported on Schedule C, as we mentioned before, but FICA taxes are applicable in this entity, and it's applicable to your net income. So if you made $100,000, you spent 50,000, you got a profit of 50,000. Yes, you are going to pay taxes on 15.3% of the net profit for FICA. I'm going to give you another example. If you open a sole proprietorship, you made 100,000. Let's say that you made expenses of 50,000, real, reasonable, ordinary, and necessary expenses. But you look at the account and it has only 10,000. So what's the problem here? You come to do your taxes, you go to do your taxes, you show a profit of 50,000, but you look at your bank account and you have only a balance of $10,000. And you look at the tax report and you tell him, hey, dude, you're crazy. You're telling me that I make $50,000 and I only have 10,000 in the bank account. How come I'm going to pay all that much money if I don't have it? It is probably because the owner took money out that is not deductible. 10,000 here, 1,000 there. So at the end, it is very common as a sole proprietorship that your net income, it is not the same as what you have on your bank account at the end of the year. So that's where you have to understand that you are getting taxed at 15.3% of your net income. Okay, if you already spent that net income on personal expenses, okay, that doesn't help the situation, but it doesn't change the situation either. Okay, so it is very important to understand that. On top of that, you're going to have the federal income taxes at the personal level, maybe at 10%. So imagine you have net income of 50,000 and now you are getting taxed 10% on, let's say, 30,000 and 15.3% out of the 50,000. That's going to be a big tax bill at the end of the year. So better understand how you are getting taxed so you are prepared for the end of the year when tax time comes. Okay. That's sole proprietorship. Very easy, very manageable, but you have to be careful with your estimated taxes, And very important point, you do not take salary in a sole proprietorship, okay? If you have a sole proprietorship, don't make yourself a W-2. You can make W-2s for everybody else. You can have other employees, but you do not make a W-2 for yourself as a business owner, okay? You have to make estimated payments. You have to make estimated payments to pay your taxes. What are the estimated payments? It is based on your net income. It's kind of that easy. Instead of waiting for the end of the year, calculate how much is your net income every quarter, and you go and deposit your tax liability, as we all do, you know, periodically throughout the year. So all the business assets and liabilities and income are treated as belonging directly to the business owner. There's no separation, but there are still obligations. Let's talk about partnerships. Partnerships are very similar to a sole proprietorship, but they are more than one person. Okay, so it's when two or more individuals carry on a trade of business, and you don't have to have an entity to do a partnership. This happens automatically. For example, me and Mike decide, hey, let's do business consultation. I'm gonna do the bookkeeping, you're gonna do the website. Okay, Mike? So I'm gonna bring the clients, let's do the bookkeeping, you keep up the website, we are in a partnership. What's gonna happen? We're gonna have to file a separate return, which is called a 1065 with IRS. And at the end of the year, we are gonna get our share of the profit or losses, and we're gonna pay taxes on that. What taxes? The 15.3% FICA and the federal personal income taxes as well. Same case as a sole proprietorship, is just bringing another person into the mix. So if let's take a quick break over here, because imagine me and Mike are going to do a partnership. Did we file anything with an LLC? No. Basically, we went and registered our partnership as a general partnership in the state, and now we have to do a separate tax return for IRS. So it is very simple to complicate things sometimes. So once we come together, do the partnership, make sure you comply with the state, comply with the federal level and the local level. Let's do an example. Me as a tax preparer to do bookkeeping, I probably need to get a bond at the state level. You, Mike, as a business consultation for websites, you don't need to get a bond at the state level.
Yeah.
So in our mix or business consultation, we have two types of services, but we have different requirements because of the type of business. Okay, I'm gonna have to get registered with IRS. No, you don't have to. You maybe gonna register with Google, you know, to run your business. But definitely, it is different eyes at different levels, and you have to understand that one doesn't communicate with the other many times.
Yes, and in general, if you get together and we form a general partnership, which aren't used as much because the LLC's kind of taken control of that.
Yeah, everybody wants an LLC.
Everybody wants an LLC because if Juan and I got into business as a general partnership, if I do something stupid and get us sued, I get us both sued, right? Juan's liable for me as much as I'm liable for him, which I know you all love your business partners, but we don't want to do that, right? It can be really bad. So in an LLC, you are limited in your liability, which
Yes,
is,
and definitely have to have an operating agreement, a
yes,
contract between the partners, because if losses start coming or a lot
Juan
of
had a
money
client
starts
come in
coming
one
our
time.
way, hey, we need some rules of the game. So the same as sole proprietorship, the partners in a partnership do not get a salary W-2. Okay, No, it's a no. We can have other employees. We can have the receptionist. We can have another person that does the advertisement for us. We can pay them with W-2, but we owners don't get W-2s in partnerships. What we do is the same thing as a sole proprietor. We do our estimated taxes based on our net income for that particular period. Okay, good record keeping necessary, and we're gonna get tax on that net income at the for FICA and federal income taxes when we do our personal taxes. And this might become tricky because let's say that 100,000, 50 for you, 50 for me, Mike. But my wife also works. She makes another 50. So my federal income taxes are going to be higher than yours because I'm combining wife and mine. But you is going to be only the 50. So you're going to have lower federal income taxes at your personal level than me. But FICA, we are going to pay the same. Okay. That might be a problem with between partners, but better get it resolved before. C corporations, okay? And just to recap, sole proprietorship, partnership, C corps, and S corps, those are tax structures, the entities that are getting the money. We're talking about the federal level. We're not talking about state. Okay. So, a C corporation is an entity created at the state level. We have an entity, but it's getting taxed at the federal level as a C corporation. There are annual fees, annual requirements for officers, shareholders. You have to do bylaws. You have to issue stock. Some of those compliance issues that need to be done. Like they said, if you say a quack, you better walk like a duck. If you say that you're a duck, you better walk like a duck and quack like a duck. So keep up with the compliance. Um, it is recognized as a separate entity. Again, you get an EIN with IRS and you file your taxes in Form 1120. As a separate entity, you have to get your EIN at the IRS. 21%, it is the tax rate for corporations based on their net income or losses. 21% might look a little bit high, depends on your personal taxes. Some people are making a lot of money, so they're getting taxed already at 25, 30. So 21 doesn't look that bad. It depends. Dividends are distributed and taxed again at the individual level. Corporations are very different in that aspect from sole proprietors and partnerships. That who gets the money? The corporation, and then the corporation have to do their own taxes, meaning that the corporation pays taxes of 21% as an entity. On the sole proprietorship, the person pays the taxes. In the partnership, the partners pay the taxes. So not the entity. Okay. The sole proprietor is not an entity. So the corporation, in order to distribute the money to the owners or to the shareholders, have to issue dividends or W-2s. In this case, it's okay. It's proper to do W-2s to move the money from the corporate to the individuals. There's always flexibility to spread business earnings between corporation and shareholders, set salaries. There are a lot of tax benefits like fringe benefits in the corporations. S corporations. These are the most popular ones out there, but I think many people don't understand all the requirements. We have I've seen some business owners that went ahead, read the wonderful things about S corporations, but did not understand the requirements of the S corporations. Okay, so gotta be careful what you open. Ask the questions before you make the decisions. Again, you need to create an entity at the state level, an LLC or a corporation, and then you tell the IRS, hey, I want my entity to get taxed as an S corporation. Okay, so you do that by filing the form 2553 with the IRS. You must follow the same Nevada requirements as a corporation. So once you open an S corporation or an entity, you have to get your EIN, the same as before. The S corporation, it is a mix of a corporation and a partnership. Why? You have to file a separate form, okay, which is the 1120S at the end of the year. But the S corporation does not pay taxes as an entity. It flows again the profit and the losses to the shareholders, to the owners, to the members. Okay, that's what is similar with a partnership. So at the end of the year, we're going to calculate the net income of the company. We brought income, Mike. We had expenses. We got a profit of 50,000. We are partners 50-50. So you are going to get a K1 with 25,000, and I'm going to get another K1 with 25,000. That's going to flow to our personal taxes. Okay. So that is the similarity between with the partnership. But the company, the entity has to file its own taxes. The kicker here is that remember that in the partnership, whatever money it flows to us as partners, it is subject to FICA taxes and federal and income tax and personal income taxes. In this particular case, in the S corp, the money that flows is not subject to FICA taxes, but it is only subject to personal income taxes.
Income tax.
So after all that mumbo jumbo, we can save 15.3% from the net income. That's kind of the bottom line. That's what everybody loves about the S corporation. You can save 15.3% of the FICA taxes from the net income that flows from the S corporation to your personal taxes. Okay. But there are conditions for the S corp. Okay. Shareholders must receive a reasonable wage from the S corp. Okay, Mike. So we made $50,000 out of our S corp, but we need to make reasonable wages for me and you as well. So we have to figure out what is reasonable, and that's going to be based on our experience, our duties in the company, our hours that we put into the company. Okay, so maybe I'm doing more of the operational side, accounting and all the stuff, besides helping the clients. So I might get a salary of 20,000, and you might get a salary of 10,000. Okay, so let's do a little math here. We got a before we got a profit of 50,000. But now, because we have an S corp and we have to comply with IRS, I have to make a reasonable salary for me of 20 and 10 for you. So that's 30 that's going to come out of our net profit. Okay. So at the end, we have only 20,000 in profit because we took out our wages. Okay.
And
So out
the
of the
reason this is
20,
important is because distributions are taxed at a different level, correct,
yes,
from wages.
exactly.
And that's a very important point. And you need to work with your CPA or tax person to see where that sweet spot is if your business is producing uh, profitability.
Yes, it is very so at the net profit of 10,000 that we have left over after we took into consideration our wages, 5,000 for you, 5,000 for me. Okay, so before we got like a 25%, 25,000 profit, but now it's back down to 5,000.
Mhm.
So flexibility and good bookkeeping is imperative. You have to make the proper planning. But I'm gonna give you an example just to illustrate this better. So shareholders pay personal income taxes on the net income, uh, even though the money remains on the business account. This is very similar to the sole proprietorship because imagine, Mike, we have a net profit of $10,000 in our tax return, but neither you or me took that money. Still the 10,000 in the bank. We
Doesn't matter.
Yeah. So because we need it for the
You still have to
upcoming
pay taxes on it.
expenses, yes. But even though we didn't touch the money, it didn't get into our pockets. We
Still got to
have to
pay
pay
taxes.
taxes on that net profit. Okay. So
Now, in
planning,
a C corporation, it's different. You can park your money there because it pays its own taxes.
yes, yes. The shareholders must receive a reasonable salary. You talk about that, but we're going to do a little practical example here. Okay. So the S Corp. The S Corp has income and has expenses. Out of that, out of those expenses, you have to include a reasonable salary for the owners. Okay. Yes, you can have employees. That's normal. But because of the S Corp, you have to compensate the shareholders. That W-2, of course, is going to pay FICA taxes, Social Security, Medicare, and federal taxes. Like any W-2, it's going to take taxes out of your wages. And that W-2 is going to end up in the tax return of the shareholder, like any W-2. In the Out of the profit, we're going to have a distribution that shows on our K1, and it's going to go flow to the shareholder as well. Okay. So in our example, out of the we got I got wages of 20,000, which is gonna be here on my W-2. I'm gonna pay taxes on my wages. I'm gonna report it on my 1040, and also I'm gonna get the leftover of our profits. It was $5,000, 50-50 on to my shareholders. Where are the savings of having this kind of a structure? It's gonna be the FICA on the 5,000. Okay, so 5,000 times 15.3%, whatever that money is. So that's gonna be your savings. Yes, with proper planning and with proper bookkeeping, you can save more money if you start making more money. So the S corporation has a lot of popularity, but it has its own complexity as well. So
And there's a
uh,
cost to keeping it up.
Yes,
You
it
have to
is a
pay a
cost of
tax
keeping it up.
preparer or a
W-2s,
CPA.
workers' compensation, unemployment insurance, all that stuff. But make questions before you make decisions. Okay, so understand the S corp first before you jump into one. So let's see. What about the LLC? We talk about the LLC. Wow, we're running out of time. We talk about the LLC for the state. IRS does not have um, rules about LLCs. So uh, once you open an LLC, you have to remember that we look at the chart, and you have to either take the default classification or make the election. Okay, so if a LLC has one person, single member, it will default to sole proprietorship. If the LLC has two members, it will default to a partnership. If the LLC has one member or more, but elects to file the form 2553, it will become an S corp. If the LLC has one or more members and files the form 8832, it will elect to be taxed as a corporation. Okay, so the LLC will let you choose what kind of tax structure do you want, or it will default to the one that corresponds to. Okay, so one member or a husband and wife here in Nevada, sole proprietorship. Two more, partnership. One or more, and elects the S corporation election, 25 form 2553 or 8832 to become a corporation. Okay, so again, you have to understand the different levels. At the state, you open an LLC, but then you have to be careful how you're gonna get classified at the federal level, because that's how you pay taxes. Okay, those are the rules of the game of your LLC. Once you open one, just as a refresher, sole proprietorship. How do you get your money out of your entity? How are you getting paid out of your entity? The money goes straight to the sole proprietorship. You can take draws as a business owner. It really doesn't matter. If you keep the money in the bank, you're going to pay taxes on the net income. In the partnership, you take distributions, same as a sole proprietorship. You can take money out of the partnership. That money that you take out, it is not deductible, so you're gonna get taxed at the end. Corporations, if the money is inside the corporations, you have to do a W-2 or pay yourself dividends to make the money flow to you. An S corporation, you have to make a W-2 if you are a member, an owner, and you get tax on the distributions on the K1 at the end of the year. Okay. Hopefully that can create a little bit of a map in your a map in your eyes, an imaginary map on how your LLC might be placed in different levels on different types of tax structures, and you can control the taxes that way and anticipate taxes that way. Which one is the best option? Uh, you have to analyze your business plan. Consider the nature of your business, the level of risk, Are you going to look for funding? Are you going to look for other investors? Are you going to be managing employees? You need to keep it simple, or you need to have an entity to protect yourself. That's kind of the bottom line. Um, you have to consider all the fees that involve having an LLC or an S corp or a C corp, unemployment taxes. There are some tax benefits like the QBI for your business. But compare scenarios and use technology. Now we have excellent tools where you can compare it. Okay, if I have a sole proprietorship, an S corp, and a C corp, and I have this much earnings, how's it look like on my tax return? What are the taxes that apply and don't apply? But now you have the fundamentals to do that. You know about FICA taxes, you know about federal income taxes, and you know about corporate taxes. So you can assess the situations um, in a better way. So how do we open an entity in Nevada? SilverFlume, it is a website at the Secretary of State that lets you do that. We can do most of the things online right now. Okay, so I really encourage you to go to the SilverFlume uh, and create a login. Okay, create a login. Um, Why? Because do not depend on somebody else to do your filings and to have access to your documents. Okay, you don't need to be a lawyer to create a login here. Okay, you just have to be a business owner. Okay, don't even a business owner. I mean, you can go and create a login and don't ever file one, and you can have access. So create a login. It's going to give you access to all the online tools, and you can manage and create your own entity this way. Once you create a login, you're going to have your profile right here, and you're going to have the links to start your business. Like we mentioned, there are some entities that you can create. You can do general partnership. If me and Mike go ahead and file, get into business, you can do your sole proprietorship. This is to register your business. Okay, we can create a domestic corporation, or we can create an LLC. There are other types. We don't have time, and many of them are very, very peculiar for specific situations only. So once you create, we're going to go ahead and choose the LLC example here. Everybody loves an LLC. So articles of organization is what you get when you create an LLC. When you create an LLC, you don't have shareholders, you have members. Okay, so start that process. Is gonna ask you if for your name. If you already had a name reserved, you can punch it in here, or enter the desired name for the company that you want, and then you're gonna press next, and Sano services in this case, and it's gonna let you know if it's available or not. Okay, usually to register the LLC it's $75. I don't think it went up. So after that, do you have a serious limited liability company, restricted limited liability company? If you think you need one of those, make sure you contact a lawyer. Okay, because those are more sophisticated LLCs. So better partner up with a lawyer to make sure you have all the paperwork done. Once you have that, you have to select a registered agent. What is a registered agent? Okay, you can search and get one from a big list, or you can be your registered agent. So You can create one with under your name. Basically, the registered agent is the designated person that's gonna get all the legal documentation, subpoenas. Nevada wants somebody here in the state, physical location, to get correspondence if anything gets wrong. Okay, so that's kind of the main function of the resident agent. If you live here, there's no reason you can be your own uh, registered agent. I'm sorry, registered agent. So create one, go ahead, select yourself as one. You're gonna be a non-commercial registered agent, and go ahead and do so. Um, Once we we mentioned before that LLCs do not have shareholders; they have members. Okay. Hello, great information for LLCs, but when are you required to file a federal tax return even if you are not operating yet? Yes, file a tax return even though you are not operating yet. The IRS doesn't know.
Zero
Um,
return.
do a zero return. I mean, if you paid something, take a loss. You have to renew your licenses, I'm pretty sure. So you
You
can
probably
file
had some
that with a
expenses
loss.
associated with it, right, Juan?
Yeah, but especially because the IRS doesn't know, so it's gonna count you as absent. You know, did not file. That's gonna say it, not compliant, not filed. Uh, you have to file with whatever information happened. If nothing happened, yes, go ahead and file. Otherwise, you're gonna create like an incomplete, something missing out of the with that EIN number. Okay, very good question. So you have to decide whatever is going to be. Oops, where's my mouse? Right here. Manager or managing member. What's the difference? The owner is a member. Okay, we already decided that. So who's going to be managing this LLC? The actual member or another manager? I can be the member of my LLC and I can designate Mike to be the manager. So you have to decide what's the management structure. It's going to be member manage or with a manager. Okay. If you are the member and you want to be the manager, yes, you are a managing member. Okay. You're not only a manager. Okay. So this is very important when you go and open a bank account. They're going to ask for, hey, who's the manager here? Um, we need their signature to open a bank account. So usually is the managing member option for most LLCs here. So add that as an officer and save it. Click that you are telling the truth and nothing but the truth. You have to do an organizer and save that information. Always click save because in this website you have whatever option you pick, you have to click save in order to make it official. Okay, then move to the next page. So you're gonna declare, yes, I want to be the organizer, and yes, I want to be the registered agent, and go ahead. And basically you are halfway there. You have your LLC. $75 is gonna go to your checkout, and then you move to the next part of the filing, which is the initial list of managers and members. Okay, so you already declare, specify that this is gonna be member managed your LLC. Okay, so after this, you have to say, hey, who is gonna be involved in the managing aspect of the entity. So even though you already entered that information before, you have to enter it here because this is the list for the annual registration. So maybe your managers can change from one year to the other. That's why there's an extra step here, and you can add additional officers as well in here. So maybe you're gonna add up yourself again, and then you have to declare that all the information is true, and it's gonna be another fee for $350 for the annual fee, and this 350 is due every year for now. And basically you are opa, you are required to review the information, who are the officers, the signatures, who's signing, who's authorizing, who are the initial members. Boom, you got a checkout item in the card ready to check out. You can actually stop here and file the LLC, but the SilverFlume, it's a very an incredible tool. Why? Because you can do your common business registration. What is the common business registration? It is a registration that is going to share the information with other entities in the state. And this simplifies things when you are looking for answers. Um, I'm going to show you why. So over here, you're going to put the NICS code. What is your industry? And you really need to know this. Okay, and what industry are you? Right now, the number 541213 is for tax preparation services. Okay, so I enter that. Is gonna describe my entity, the services that I will provide. It's gonna ask me, um, am I a minority-owned business, a woman-owned business, a veteran business? Uh, do I have a Nevada location? Yes, I do. Once I have a Nevada location, it's going to ask me, do you sell goods and services outside Nevada? This is because of sales tax things. Would you be interested in learning opportunities about how to expand your business outside Nevada? This is for resources in how to grow your business. It's going to ask you for your EIN number. Okay. Even though you might not have a EIN number, it is not a required field right here, but it's good that you have your EIN number by now. So usually what happens is you go and create your LLC. You make sure you have the name, you have everything ready. Nobody took the name, you like it, perfect. Then you move to the IRS website and get that EIN number for the entity. Once you get the EIN number, you can come back and do the common business registration and
And
enter the
don't
EIN
get
number
your
here.
EIN from any other source other than the IRS.
Yes, if you get into a website that is asking you for money, you're on the wrong website.
You're in the wrong website. It takes about 5 minutes to get your EIN online.
No, no,
All right,
a
Juan,
little
maybe
bit more,
10.
a
Maybe
little
10.
bit
I'm
more.
pretty
Yes,
fast. I'm pretty
yes,
fast
yes.
with the EIN, Juan.
Okay, but depends on your, you know, how
I'm a good business partner. I get the
good
EIN
business partner.
quick.
Perfect. So, so yes, you get your EIN. You can get it online. You get it for free, so you can enter it here. Okay. See, they're moving. You have to do two things simultaneously. Open your LLC and get your EIN number on the IRS website, which are completely different websites and entities. So once you get your EIN number, this EIN number is gonna be distributed to the agencies that you need to that you need to comply with. For example, if I am in the selling business, that EIN number is probably going to go to the sales tax department, and they're going to know about me, my entity. That's going to help me register and comply with all the Nevada requirements. So you have to enter your location here. It tells you that you can do a DBA as well, and that's on Clark County website, not here. But definitely, when you add up the location, you can put your DBA here, and you're gonna tell if in that location you're gonna have part-time employees. Are you gonna have any full-time employees and things like that? What's going on? It's asking you about employees because it's gonna let you know that you need to file workers' comp, and you might need to file unemployment insurance with the state of Nevada. So this common business registration is asking you questions so you become aware of the other requirements with the other agencies in the state, depending on your industry. So for some businesses, it's me, myself, and my LLC, nothing else. So you by completing this, you're gonna feel safer that you are doing the right thing. You can enter your DBA right here, and it's gonna get registered. So, trick question: if you enter your DBA here, that means that you are registering your DBA partner.
No.
No. Okay. So you are on the state website, SilverFlume. You are
You
doing
only
your
do
business
DBA with Clark
registration.
County.
If you put your DBA here, does not mean that you have registered your DBA. You have to go outside and get it registered with Clark County. If you enter your EIN here, that means that you are registered with IRS. No. Okay. So different entities will give you
There's
the different
there's a question,
requirements.
Juan.
Yes. I recently changed from a sole proprietorship to an LLC, but I used the EIN number from my sole proprietorship, and now I have a new IN. How to update the number with the state of Nevada? Do I need to do it? Yes, you need to do it. I mean, think about this. Why did you open the LLC? Because you want separate liability. You want
Right.
everything transferred to an entity. You want to run things separate from you.
So you need a new EIN, correct, Juan?
Yeah, they already got the new EIN, but now you have to let the agencies that there's a new entity in town,
Hmm.
okay, with a new EIN. Uh, and this is for change
And also, if you've been doing
the state
business,
of Nevada.
if you've been doing business and you have some like trade lines of credit you had as a sole proprietor, you want to make sure to update those as well.
Mhm.
If you buy office supplies online or anybody you have on account to help your business credit, you can have them merge those two together.
And also, you are running things, your business with an LLC right now. So that sole proprietorship registration, you're not using it anymore. Okay. Um, you change ships. So now you are an LLC with your EIN number. You have to close that sole proprietorship and continue everything with your LLC. For example, if you had employees, now the money is coming out from the LLC, not from your sole proprietorship anymore.
Mhm.
So you have to update that with the unemployment insurance and things like that. Sales tax division, if you do so. Um,
Juan, there's one more question. Should we do
oh,
a DBA before we do the common business registration section? Yeah,
Yes,
I'd
just in
recommend it.
case that is taken, very low probability, but get the confirmation before you tell the world that you have that DBA. Okay.
I had a client one time that put in, she typed the wrong name in. She made a typo on her LLC application,
Oops.
and then it filed the DBA under the proper spelling, and so it looked like two different entities. So that's like a I've had some people do some things, but you need to have one entity with IRS, and if you're not using other ones, I had one that client that she had the name of her business had number one, like hashtag one was part of the name of the business. Well, I think the EIN site doesn't allow you to put hashtags
Yeah.
into the title. And so she tried to file one and she wrote out number one, then she wrote NO period one, and then she put one dash or something. And she ended up having four or five um, EINs that she had filed. And so we had to literally call IRS and ask them, what do we do? We have all these files. We want to use
Yes.
just this
Cancel.
one. And they had to write a letter back. And yeah,
Yeah.
it gets a little crazy. So
Don't
you want to
don't
make sure
don't
your name
confuse
is
the
available, like
computers.
Juan
Don't
said,
confuse the
and
computers.
don't
So
confuse it. Yeah, just make sure you got it done.
after you enter the location, you can add more locations if you have to. But this is gonna let you know, hey, what about some rules about compensation, wages, information about employment agencies and things like that. Folders, no folders, posters that you have to put in the on the employees lounge in employees areas.
HR issues.
HR issues. It has a lot of information. You can get free posters many times in this website. Then you have to read all the fine print, check all the marks, check marks, done, and file. Then it will guide you. What about sales tax clearance? What about ocean safety? What about DMV and registered commercial vehicles? So this dashboard is going to provide you tons of information about other agencies that might be related to your business. Okay, you can go ahead and, for example, the sales tax is pretty simple. If it doesn't apply to you, you just check, hey, it doesn't apply, I don't sell anything, so I don't have to do sales tax reports. Done. You keep that, and they're not gonna send you letters. And you can check out. It's usually 425 bucks, and there you go, you have your LLC.
Woohoo!
Remember, once you have your LLC, make sure that you know how you're getting taxed, and try to try to keep always in compliance. Opening up an LLC, it is not that complicated. Um, they have made a wonderful job on that website, but you have to make sure where do you end up on the IRS eyes. Okay, you once you open an LLC, are you gonna be sole proprietorship, partnership, S corp, C corp, and then how are you getting the money from the entity to you and the tax
Yes.
implications? Okay.
Because when you open an LLC and you get your EIN, the IRS automatically classifies you as what they call a disregarded entity, right, Juan?
Once, if you have a member, one single member, you and your wife, you become a sole
Yep.
proprietorship,
Yep.
yes, by default.
So you have to tell
But
them how
if
you
you
need to be
think that
taxed.
you're going to take advantage, you can take advantage of the S corporation. You go ahead and don't follow the default classification. Go and file the 2553 and become an S corp in the eyes of the IRS. And it is very common for a business to start with as a sole proprietorship. Yes. Okay. Me, I'm gonna do taxes. My practice work. grows, I'm going to open an LLC. I need some protection. I'm going to hire employees and things like that. But my LLC keeps filing as a sole proprietorship because it's only me. Okay. So I changed my entity, but my tax structure did not change. I'm still filing as a sole proprietorship. But then I start growing and growing and growing. So you know what? It's time to get change my LLC to an S corp for tax purposes. I follow the rules, and then you know what? I'm ready to get investors, and I'm gonna open up my franchise. So let's do a corporation tax structure. So the same business change to an LLC, sole proprietorship, S corp, and then a C corp. Okay. Thank you. Thank you for joining us.